Good morning, everybody. This is TJ with the Counterpunch Trader, netpicks.com, and I wanted to record a video today for our newest members. Basically, I haven't done a video like this before using Thinkorswim and TradeStation. I personally like to use TradeStation charts and place my trades with Thinkorswim, and I thought it would be interesting to watch a Thinkorswim chart next to a TradeStation chart. If you're just starting out with Counterpunch, there's a whole process that you should follow on the Owners Club, including the steps in the success guide. So today I'm going to trade a single position as if I were a relatively new Counterpunch trader and demonstrate how to place trades using the Thinkorswim platform. I've got a template set up so that when I place a trade, like for example, if I place a long trade right here, you're going to see that there's a target that's 20 ticks above my entry, and I've got a stop that's 20 ticks below. And so, for example, in this last trade, I'll just show you, this is before our start time. Market's pretty choppy, but there's a setup right there at 48.71. So if I'm over here in the platform, I could place it at 48.71. And then once the trade is placed, I can move my target to 48.88 and my stop to 48.54. Like this, the trade is quite straightforward and easy to manage. And you can see that Thinkorswim is pretty much mirroring the TradeStation charts. These are both 377 tick charts, and they're really close to each other as far as how the bars are placed. It's not exact, but it's close. You can see that the setup here was the same that I just showed you on TradeStation over here on the left. I just find TradeStation a lot easier to maneuver around. But like this, we'll be able to look at both charts. And now we're not starting until 8:50. Okay, so we're still a few minutes ahead of our start time. There is a setup right there at 8:44. But I'm just sticking to our trade plan. Our trade plan starts at 8:50. So we still have a few minutes to wait. So you can see that this trade triggered in right here. By clicking on the bar, you could easily see the entry at 96. It triggered in and it's already jumped up to 03. It's hit its first target. It's still not our start time, however. Close, not quite there. About another 45 seconds. It has not yet gone 10 ticks. One of the stipulations of this trade plan is if it hits money management, then we won't get in sync with the trade, but it has to hit target 1 and it has to have gone 10 ticks. So it did hit target 1, but it hasn't gone 10 ticks. It's only gone 7. That's a pretty small trade. So we may still grab this. And you can see that on Thinkorswim, there's another setup setting up. You can see it. This one kind of shows you it before the bar is finished forming. And we may end up taking that one instead. And it is our start time. And that one's right above the whole number of 49. There it is. So I'm going to go with that one, 49.06. That makes a new high for the day. Let's go ahead and place that. Hopefully we catch a nice move higher. It's going all the way to 24. So this is a nicer size trade. And our stop is down at 87. There we go. You'll notice there was a key level adjustment. The entry got above the nickel, the 49.05. We usually get in 2 ticks above our setup bar, so that would put us at 05. The calculator pushed the entry up to 06, made the 1 tick adjustment. It's like an insurance policy, sometimes getting through those nickels and dimes. It's a little harder, and it could prevent us from getting into a trade once in a while. Usually it goes right through. These counterpunch trades are typically very good. I could have gotten in sync with this earlier trade. It's hard to know if that's the best thing to do or not. So for me, it's just a very simple rule. If that was still available at the time, I would have taken it. But when a new trade prints, then I just go with the new trade and let the old trade go. It's a simple rule to follow. It's been working great. Takes away the guesswork. So part of knowing how to trade the counterpunch trader is knowing what trade to take and what trade not to take. Now it's possible that this trade works and the new one doesn't. That's always possible. But as a typical rule and a method of trading, that's something you could follow and get measurable results and do it consistently like a business. So far, this method, the way I'm doing it, has worked out really well because the results have been outstanding since, well, for a whole year now. So no reason to change it. We'll just keep doing it the same way. Crude broke out of a pretty tight range this morning and is making new highs for the day. It's very choppy in the pre-market. Of course, it's still technically the pre-market. Just figured I'd show you this really fast. Look how choppy it's been. And then the first trade we were looking at, even though it was before our start time, was the one trading out of chop. You could see how the high trend chop indicator was inching higher and higher and higher, and it just exploded out to a really nice trade. Of course, in hindsight, had I known that was going to happen, I would have been very interested to take that trade, but that is a little early, and I am on the West Coast. So far, we've managed to avoid getting into this. It looks like it could be turning by the high trend indicator here, so avoiding this long trade so far may not be such a bad thing. It's still a valid setup, but we may be getting a short trade as well. We'll have to place that if we do. And that's a short at 87. We'll go ahead and place that. And actually, that's a filtered out trade. Let's cancel it. So we've got our chop indicator just starting right here, and that tells us not to take this trade. Notice this trade is gray. It's grayed out because of our filter. So if you have the free chop filter, and if you went through the training, you would know that we're not going to go against this yellow line, the 50 EMA, when we're going into the chop filter. We just avoid that trade. And some of them win and we wish we took them, but for the most part it does save us from some bad setups. So, it's a choppy morning. This trade is actually still valid. If it comes back up, I may place it again. If it closes below this line here, it would cancel it. So I'm just watching this bar. I may place the long trade again. Let's see. So far we're flat. Clearly it's gray. You have to be careful. And the Thinkorswim setup looks identical. See this? There's your entry. There are your targets. You can see the targets at 7.5, 6.8, 6.1. Look at these targets, 7.5, 6.8, 6.1. Everything's the same. Thinkorswim and TradeStation. So people ask me, why do you use TradeStation charts with the Thinkorswim platform? And, well, quite frankly, that's the reason. Now, if you're using Thinkorswim, you'd have to know you're in the chop filter and you need to stay out of that setup. You could also open the Thinkorswim data window, which is going to give you the same trade information as TradeStation. But again, TradeStation is just so much easier to navigate around. And TradeStation has the nice trade tracking features as well, which I find very useful. All right, we have a chance to take this trade. I'm going to go ahead and put in an order in case it comes back down. You notice it came out of the filter, and so the trade popped back up. Now, whether it wins or loses is another story. Let me make sure I get my targets and stops in place. So my stop's at 06. And my target is down there at 68. It's just about being patient. Came out of the chop zone, so it was no longer necessary to filter that trade out. Now, can it bust through and get through the yellow line and head lower? It's come down, it's come back up and tested the signal line. Now, hopefully we get a second leg lower that'll get us to target. That's the point. We'll see if that happens. You never know. But notice how we avoided the first losing trade just by sticking to the rules of our trade plan and not getting in too early. Going with the newer print saved us from getting in to a trade we, didn't want to be in the first place. So it's not just the setups on the chart that make the strategy work. It's the trade plan, it's the rules, it's what trades you take. And You can see there are multiple setups, and sometimes it's hard to distinguish which trades to take if you're new because you're not used to it. But if you follow the rules of the plan, it's just a sequence, and you just stay in sequence as you keep going forward. So I knew not to take this trade because of the rules. I knew to place this trade because of the rules. I knew to cancel that trade. I knew to wait on this trade, and then when it became valid, to place that trade. So it was just a matter of following the sequence. Now, whether this trade wins or this trade loses, we have no control over that. Because for sure, some trades are going to lose. A lot of trades are going to win. The trade plan continues to succeed. It made a new record profit level just yesterday, and it's been making new record profit levels all week. So hopefully it'll end on a strong note today. So far the market's been very choppy. But we're in it. The 50 EMA obviously shows you an area of strong support. So it's going to have to work through it. Now, if it could muster enough strength to bust through, hopefully it'll have enough energy to get us to target. If we can get to target 1 right here at 75, that'll be another level that might be hard to get through. The quarter century numbers are pretty strong sometimes, but at least I can move my stop and get to a break-even position. So far it can't get through the 50 EMA, not yet anyway, but notice that the signal line's pushing lower, and it's showing you that the pressure's building. Now, we want to see this continue to close below the signal line, but regardless, we're going to let this play out. Notice there's a new setup. That's because this is called a failed swing. The swing level failed to pass the prior one. But we're not interested in that trade because we're in the white trade. That does kind of reinforce our assumption if the price can come down. Some traders will add to their position right here, and that's certainly possible. You probably want to adjust that entry down to here, below this bar right there, just for a little extra confirmation if you were to add to your position. But the 50 EMA is still holding the price in place, so looks like a little consolidation in here. So far it's pressing down. Look at how the price is getting squeezed between the signal line and the EMA. That EMA is pretty tough. All right, here's our move. Look, we're 1 tick away from our money management level, and now we just hit it. So I can go ahead and move my stop down and lock in 1 tick, and hopefully it's enough to go further. But notice it bounced off of 75. Now let's see if it could push through. That's the quarter century number. Look, it's having a hard time getting through. Doesn't mean it won't. Now my stop has moved to here. See, I've got 1 tick locked in. So after all this effort, hopefully I make more than 1 tick. But I was very patient, just following the plan. I was able to get to a risk-free position no matter what happens. It's just another trade in the sequence of a lot of trades. And I've learned that the best thing to do is just let the trade plan do its thing. That's what grows equity in your account. That's what makes you money. That's why we trade, to make money. I can't worry about the outcome of 1 trade. I just have to make sure I execute it the way the plan says. And that's what I'm doing here. Very choppy market, of course, but by being patient, the setup has worked. Look, there's another setup down here. Again, a chance to add to your position if that is something you like to do. I personally do that with Forex. Notice that the calculator pushed the stop down. You can see it's right here, a little white dash right there at 86. That's where my stop is. You'll see I moved it to 86. Can it get through that 75-cent level? That's the next step along the way to our target. And it's trying. Look at it stuck on there. There it goes. All right, now we have another hurdle. We have to get through the 200 EMA. But look, we're getting there. It's a dogfight every step of the way, kind of like a goal line stand in a football game. You have to fight for every inch sometimes. The fact that the 50 EMA is curling down here is a good sign. It could mean a bigger move down. Just trying to punch through. We've got to get down to 68. 4 ticks. Just trying to fight to get a few more ticks out of this trade. Nice profit right there with 15 cents, but you know, it's the long-term statistical edge that these trades give, and by being patient, it's a good discipline. You want to get the most out of each trade. Those targets are there for a reason. Markets can get really slow sometimes, but let's see if we can push through. Trying to make a swing low here. Nope, still bouncing. 200 EMA is pretty tough, just like the 50 was. Well, sometimes these trades will last a minute or two. This one's lasting quite a bit longer. Just the kind of session that it is. Trying to make its move. Hopefully it pushes through with some built-up pressure enough to get to that target. Of course, by the time you're watching this, I've already edited out all the dead space, so I've condensed this trade and made it a lot shorter as far as just the passing of time. But when you're sitting here, you got to find a way just to be patient and not let time dictate your trade decisions. The stop might move down. Let's see, that's at 83. Might lock in a few more ticks here. Hopefully this fourth time is a charm and it'll push through. Price is compressed between these tight support and resistance levels. This is what happens when you have balance in the market. You have equal strength between buyers and sellers, although it looks like the sellers are a little bit stronger so far. That attempt to get higher looking like it's failing here. So now let's see if our attempt to get lower will succeed. Still that 75-cent level. Come on, you could do it. There it is. All right, I think I just missed my target by 1 tick. And I'm going to protect myself on this one. There it is. Full target. Look at that. Quite a trade, huh? Now, if you're trailing, of course, look at how the trailer is still going down and working its way lower. This may end up being a really nice sized trade for the trailer. I'm not trailing. I only traded a single position. There's the P&L, 19 ticks. Notice the patience. Notice the setup, how it worked. And just to follow this trade to the end, the trailer has moved down to 77. So it would be here. And this trade could take a while. At the rate we're going, if it continues to work lower, and that signal line continues to hold the price like it's been, notice it's contained it all the way down. Over here, clearly we would have stopped out if we moved our stop too soon. There's a reason the stop doesn't move until the price has gone the necessary distance. And once it did, well, you saw what happened. The stop just moved lower. Now it's at 76, hiding behind the 75-cent key level. A lot of head fakes, a lot of fake moves, but you don't have to worry about any of that. I didn't want to see the price come all the way up again when I was only 3 ticks away from my full target on 3 occasions. I didn't want to see that, obviously. But who cares what I wanted, right? That's what the price did. But the strategy and the trade plan and the setup, it worked perfectly. There's target 3 being reached. You could certainly trade a position of target 3. Target 3 with a nice risk-reward ratio, of course. Notice the stop is still holding at 7.6. All right, so see how the stop is pushed even lower to 72. And notice on the Thinkorswim platform, this would have been the trade we were in. You would have had to have known to filter it out. Thinkorswim just doesn't have the same level of sophistication from a programming point of view, so it's going to show you the setups, but then you're going to have to know the rules. So you would have still taken the trade when it came out of the choppy area and came back up pretty much in the same spot that we took the trade. But you just have to remember to reference the targets over here. Now, again, you could open the data window so you can see what those are. But the stop is up here at these dots. Once it gets to target 1 over here, you can move your stop down and lock in your 1 tick, and then start trailing the signal line. You basically would be in the exact same spot as TradeStation, but TradeStation has the ability to track some of these setups as we're watching it do here with the trade we were in. But you still manage it exactly the same way. Now that stop has just moved down to 71. You can't see it because it's underneath the EMA. But as the signal line came down, so did the stop. So you move your stop from here to here now. And it's about ready to even go lower. The stop is going to move to 66 most likely in a moment. And like I said, this can turn into a really nice sized trade. And that's exactly what's happening. There you see the stop move down to 66. See, by knowing the strategy, you could even anticipate where it's going to go. This is going to go even lower. Well, we'll see. Maybe not. Might hold at 66. So that stop has now moved 2 ticks past the target where I exited. I was tempted to cancel my target and just trail this trade. I was tempted because I could see the beginnings of what could be potentially a pretty strong move down. You see that 50 EMA starting to curl down towards the 200. Price broke through. Now the 200 is beginning to curl down. You got momentum coming down in the high trend. That's the fast trend on the higher time frame. So the stars are aligned here for a much bigger trade. Plus, if we look, let me compress this down. I'll show you something here. This is the low of the day right there. Actually, no, the low of the day is a few bars right here. Here's the low of the day, and it's pushing down on that. And if it breaks through, that's the forward. Look at it's testing the low of the day right now. So will it hold or will it push through? If it pushes through, who knows how far down it's going to go. So like I said, this could end up being a very large trade. Multiple positions are certainly a benefit. This the stop is about to move down to 61. There it is, 61. See that? And it's making new lows now. It's making new lows for the session. How far will it go? That's the question. But this has really turned into a great trade. And if you think about everything we went through and how this trade worked out, you'll see that as you learn the counterpunch, you can build your trading up to that second position, maybe a third position, target 2, target 3, and trail. That's a really nice way to go once you've got the capital. Now this is a testing zone. The 50 is crossing over the 200. Will it continue? Sometimes it's going to come back up and retest it. Regardless of what happens, this has been an amazing trade. The stop is now at 57 and possibly heading lower. We'll just keep watching and letting this trade play out. Stop has moved down to 56. Looking pretty oversold down here in the high trend. Signal line wanting to cross up. This might be the end of this trade. Let's see if this holds. Stop is still at 56. There's an entry to go long at 56, but we've already achieved our goal with the trade plan by hitting target 2 and being profitable on the session. Notice the purple trade would have been a nice add-on. Look at that target. The green trade hit that target right on the nail. The other green trade, all these trades, all good on the way down, right? They all would have worked perfectly. And we're 1 tick away from this trade ending. And there it is. So this trade finishes right here. We're not getting long. We're done with our session. This was a big successful trade. 4856. So the trailer made 31 cents. So if you had 2 positions, you could have made 19 cents and 31 cents. Or you might have went 19 cents and 26 cents or 26 cents and 31 cents. Remember, every penny is $10, so that's a $310 move on the trailer. That was a $190 move to target 2, etc., etc. And that's how we trade the counterpunch. Whether this was crude oil or any other market, you do it the same way. Hope you enjoyed this video, everyone. Have a great weekend. I'll see a lot of our newest members in the trade room on Monday. Looking forward to that. Until then, this is TJ with the Counterpunch Trader. See you on the next video.